The top story this evening, international rating agency Moody's has upgraded its rating on India's sovereign bonds. The rating upgrade from Baa3 to Baa2 comes after a gap of more than 13 years. The last upgrade, remember, was in 2004. So what does this upgrade necessarily mean? For global investors, India is now a more credible borrower. There is lower risk involved if they were to invest in the country. This upgrade puts India at par with countries like Italy, Spain, Colombia, Philippines, Oman and Uruguay, among others. And that's not all. Moody's has also changed its outlook on India from positive to stable. So what exactly does this upgrade mean? Well, Moody's believes that the continued progress on the economic and institutional reforms will boost India's growth potential. Moody's also believes that the reforms momentum will help reduce the government's debt burden. The 2 lakh crore rupee recapitalization plan for public banks also got a thumbs up from Moody's, which believes that this move mitigates the risk in the sector. However, they have raised concerns or a red flag over the debt burden. This, according to Moody's, is still a constraint on India's credit profile. In fact, we reached out to most of the biggest voices from the government, the top bankers and a whole host of market experts to gauge the impact of this move.
This is an upgrade which has really happened after 13 years. And we welcome this upgrade. We believe that it is a belated recognition of all the positive steps which have been taken in India in the last few years.
I don't think there's a comparable story. In at least in Indian history, I cannot see a comparable time, even if I look at 91. And even in the world economy, very rarely have we seen in one nation, in a short span of 3.5 years, such transformational changes. I mean, we've almost been able to change the way this country thinks and works in a short span of 3.5 years.
This is a welcome development, but we also feel it's long overdue, because you will recall that in the economic survey we compared India's rating with, say, China's, and just from a general relative perspective we felt that the rating agencies had not recognized India's underlying macroeconomic situation. So that's welcome. It's also, I think, a recognition of the actions that the government has undertaken, GST, bankruptcy, MPC and all of that.
It's a recognition of a long series of reform measures that have been done under Prime Minister Moody, which included, of course, the bankruptcy laws, the cleaning up of the banks, and more recently the recapitalization. Then, of course, the GST. So, you know, it's an accumulation of a large number of measures.
It's an acknowledgement of the systemic reforms which have come about in India as a result of various steps taken by the government. I think there is a certain consistency in the global perception which is developing about India, and it comes close on the ease of doing business report, where India has been considerably upgraded.
It is because India has signaled very clearly that fiscal consolidation is important that this upgrade has happened. That's the causal direction. Because of this, I don't think it's going to have any effect on a decision that the government has already taken, which is that the fiscal consolidation exercise will remain.
Now, the biggest beneficiaries of the move from Moody's upgrade was the banks. The Nifty Bank Index was the top gainer, and that essentially drove both the Sensex and Nifty in trade today. Here are some of the country's top bankers on the significance of this move and how it could benefit the economy in the near term and the long term.
We deserved it much earlier. And rating agencies always take their sweet time, and they take 3 months, 6 months to keep analyzing and see what happens. If they are ready to upgrade and some negative thing happens, they'll again delay it by 3 months. So I think it was long overdue, and I always feel that the rating agencies have not been fair on India, because particularly the last year and a half, the number of reforms, and these are transformational reforms. Absolutely. These are big bang reforms. These are not incremental reforms. And these have been executed by the government. And on these grounds, they should have done it much earlier.
The economic reforms program which the government has initiated, so after say a period of pain, the results are now started to showing in. It proves that point, and the government's fiscal prudence itself, it gets a thumbs up.
I think this is a very well-deserved recognition of the structural reforms that have been undertaken by this government over the last couple of years. It is also very heartening to note that Moody's has taken cognizance of India's higher growth potential and the increased economic resilience as compared to the other countries in our rating cohort.
You fix the fundamentals, even if they cause short-term pain, and that's what gives you the trigger to go forward. In many ways, if I have to summarize, I would say actually that this upgrade is only a reaffirmation of the changing mood and confidence that you can see in the economy today.
This is great news for India, that India is finally getting recognized in terms of being a stable economy, and it's a long-term positive. But India has to do a lot more to get up the curve. This is a clear, good signal that the world is noticing India's move towards stability, and I think India should continue down this path. I think the opportunity ahead is even more.
Let's take a look at today's trading action then. Dalal Street welcomed Moody's rating upgrade for India, but the euphoria tapered off towards the end of the trading session. The Nifty ended with gains of close to 70 basis points, and the Sensex too closed in a similar range. Nifty Bank outperformed and closed the day with gains of 280 points. Mid-cap indices also closed up over 200 points. We also spoke to a whole host of market experts to get a sense of how they were reading into the Moody's upgrade and whether we would see an upsurge in the investment cycle going forward. Listen in.
This will boost investment, including foreign investment and foreign flows. In fact, foreign direct investment already has been very high in the last year and this year too. And FPI also have already breached all the limits in, if you see, in bond market, corporate bond and GSEC. So it will definitely get further boost.
I think first it will allow India as a government to borrow at lower rates. There will be a lot of participation of a lot of funds who by that mandate can only invest in countries which have a certain rating. Okay. So a lot of pension funds will be allowed to invest in Indian debt and also in Indian equity.
It has come at a time when fiscal deficit, budget deficit, all are, under pressure. And therefore, sensible investors may not react immediately. But those who already had a long-term view, they get a boost that, yes, I think we were betting the right horse, and they'll continue to invest more.
Time now for a CNBC exclusive where Finance Minister Arun Jaitley, who was in Singapore yesterday, caught up with Sri Jagaraja hours before Moody's upgraded India's ratings. Jaitley expressed optimism about India returning to its normal growth range as early as next year. This even as he expects the short-term fallout of the goods and services tax and demonetization would ebb. Not just that, Jaitley also hopes that the insolvency proceedings against defaulters and PSU bank recapitalization plan would restore the vitality of banks.
I think it's a legacy problem which I had inherited, and it's a problem which had continued for a very long time. Both the central bank and the government had attempted various solutions to it. Many of them turned out to be short-lived solutions or band-aid solutions, which really didn't resolve the problem. I think now the two major steps that we have taken, one is the IBC being put into action, the insolvency proceedings, and a number of cases being referred to it, some more to be referred to it in future, and therefore resolutions being reasonably in sight, I think is a good ray of hope, coupled with the fact that we've decided to recapitalize the public sector banks. I think if the two big moves are taken together, I think the vitality of the banks itself will get restored.
Can we say then that we can see a return to 7% plus growth rates for India?
Well, I think it bottomed out with the demonetization and then the GST coming back to back because even in the short run, as far as the GST is concerned, manufacturing for some months stopped because people were destocking, and I think that phase is over. So the bottoming out is complete, and now we should see a curve for the better.
What's your outlook for 2018?
Well, I see the Indian economy picking up quite well. All indications do indicate that we'll certainly improve, and whatever is the Indian normal, other factors remaining the same, we should be able to grow between that 7 to 8% rate.
Coming up, Toyota and Suzuki will join hands and introduce electric vehicles in India by 2020. Details on the other side. Vodafone and the Indian Tax Department continue to remain locked in a legal tangle. Both sides have failed to reach an amicable solution for the London arbitration in the 20,000 rupee tax dispute. Now, Ashmit Kumar has the latest from the court action. As always, Ashmit, what were the arguments presented by both sides in the court today?
Well, the issue that is up for discussion before the Delhi High Court essentially is that can Vodafone, which has already initiated arbitration proceedings under the India-Netherlands, India-Dutch bilateral treaty, can it also do the same? Can it also initiate arbitral proceedings in the same dispute, only this time in the under the India-UK bilateral investment treaty? Now, that is essentially the subject matter of discussion. The Delhi, I beg your pardon there, the Tax Department clarified its position before the Delhi High Court that the Tax Department believes that these proceedings which have been initiated, parallel proceedings that have been initiated, is a case of forum shopping, is a case of Vodafone abusing the due process that has been provided by law, that it is arbitrary and that it is unfair. Essentially, what the Tax Department is saying is that it is not comfortable with having parallel proceedings in two separate forums under two separate treaties for the same transaction, for the same issue. This is something that Vodafone had been seeking. Vodafone had sought to initiate proceedings under the India-UK Pact as well. But importantly, what's important to keep in mind is that in the month of August, the Delhi High Court had stayed those arbitral proceedings, so that stay continues to be in effect. But as of now, the battle lines have been clearly drawn. The Tax Department saying that there is no point, there is no case that has been made out for the Tax Department to relinquish its position, for Tax Department to cut any concession to Vodafone, and that it will insist on its position that you cannot have parallel proceedings under two separate treaties for the same transaction, for the same tax demand. So on the back of that now, the Delhi High Court recording that there is no amicable solution, at least on this limited issue, between the two sides, between Vodafone and the Tax Department, and that they will hear both the parties at length to decide whether or not the Vodafone can begin parallel proceedings under the India-UK treaty as well. Those proceedings, we understand, are expected to begin in the month of January. So clearly, battle lines are drawn. Tax Department not conceding any ground to the British telecom major. Back to you.
All right, we'll watch out for that. Thank you very much for joining us, Ashmit. But, you know, among the spate of upgrades, Care Ratings has downgraded Aircell's long-term loans to D from DD+. Now, this downgrade comes after Aircell delayed its interest payments due to weak liquidity and operational performance. The downgrade is also based on a consolidated view of the credit risk profiles of Aircell as well as its wholly owned subsidiaries. Now, remember, Aircell Cellular, Dishnet Wireless and Aircell Smart Money are the subsidiaries of Aircell and operate under a common management. Now, according to Care Ratings, Aircell's ability to service its debt obligations in a timely manner will have bearings in its future ratings. Now, Elon Musk delighted his fans at the unveiling of Tesla's semi-truck by rolling out a roadster out of the back of the truck's container. The semi-truck will go into production in 2019 with boasts of 804 kilometers, a battery and motors that will last 1 million miles, along with cheaper total operating costs than diesel models. The Roadster, which will be available a year later, will be the fastest production car ever made. According to Elon Musk, the sports car will be doing a 0 to 100 km per hour in 1.9 seconds with a range of almost 1,000 kilometers on full charge. Now, continuing with the auto space, and what comes as a major boost to India's electric vehicle push, Toyota and Suzuki have signed a memorandum of understanding to produce electric vehicles in India by 2020. According to a statement released by the companies, Suzuki will produce the EVs for the Indian market, while Toyota will provide technical support. Ronojoy Banerjee is here with more details. Ron, over to you.
Well, the alliance between Toyota and Suzuki is indeed very ambitious in scope. You mentioned about the fact that they will be developing electric cars. The two companies are looking at introducing the cars somewhere around the year 2020, while Suzuki will be making the cars. We understand now from sources in Maruti Suzuki that one of the Maruti facilities will be used to manufacture these cars, and these cars will be used with Toyota's technology. We all understand that Toyota is a world leader when it comes to hybrid technology, so therefore it's not really a surprise that the technology will come from Toyota. Importantly, the entire electric vehicle project, all the critical components, including the sourcing of electric motors, will be done locally. Earlier this year, around the month of March, Suzuki had announced the setting up of a lithium-ion battery plant, which is again money that is being invested by Suzuki in Gujarat. And clearly, together with Toyota, the cars will be sourcing batteries from there. But importantly also, we need to keep in mind that the investments at this point, it appears, will be made by Suzuki. We, of course, have to wait and watch, and we are actually awaiting clarity from Maruti Suzuki as to whether any kind of investments will be done by Suzuki's India subsidiary, that is Maruti. Hopefully, we'll have some more information by the end of the day.
All right, thank you very much for joining in with that, Ronojoy. Now, coming up, BJP releases the first list of 70 candidates for Gujarat polls. Who all made it to the list? We'll tell you after this short break. Back now, with a month to go for the Gujarat Assembly elections, the BJP has released its first list of candidates. Chief Minister Rupani will again contest from Rajkot West in Saurashtra. My colleague Meghdut Sharon joins us now with more details. Meghdut, who are the other heavyweight contenders on this list?
Yes, the names of the Chief Minister, Deputy Chief Minister and the state BJP chief figure in the first list of 70 candidates that the BJP has announced today. Remember, 5 Congress MLAs who had resigned from the Congress during the presidential polls, during the Rajya Sabha polls of Ahmed Patel, have also been given tickets by the BJP. As far as the Patidar community is concerned, 15 seats have been given to the Patidar community. We have to now await the first list that the Congress also is expected to release soon.
Thank you for that, Meghdut. Now with that, it's a wrap on this edition of Reporter's Diary. Thank you very much for watching, but stay tuned to CNBC TV18. Up next, we'll tell you what India's top bankers make of Moody's rating upgrade.